Okay.
All right.
Hello and
Good morning.
welcome. Good morning, Grace. How are you doing today?
Really good, really good. Ready to share as much information with our clients as we can during this ever-changing market.
Absolutely, absolutely. I'll just give a quick introduction of myself. My name is Hakeem Love. I'm a realtor with Compass Real Estate, and I've been in the real estate business for about five to 6 years now, and I really enjoy um, the process of home buying. And we want to present to you guys this free home buyer webinar that we're putting on, and we'll record this later and post it on all different platforms. But we wanted to go over the whole home buying process, and I have the lovely Grace Davis with me. Grace, go ahead and introduce yourself.
Hi, everybody. Grace Davis here with Platinum Home Mortgage Richmond. I am a local lender with 16 years of experience in the mortgage space. So happy to be here and share a lot with you guys about, my experience in lending, tips that we can share with you, and all of the different programs that are available.
Awesome, awesome. And we're gonna learn a lot today. We're gonna look at we're gonna answer some of the frequently asked questions, like what does my credit need to be? Is now a good time to buy a home? How much money do I need? Any first-time home buyer programs? How much income do I need? We're going to answer these questions and many, many more. And we're also going to have a Q&A session at the end of this. So you guys can either reach out if you're on this webinar live, type your questions in the chat box, or if you're watching a recorded version later, reach out to myself, reach out to Grace. We can answer any question that you may have about the home buying process.
Absolutely. There's really no question too small. Part of our job is to walk you through this whole process, beginning to end. And, for some people, they only buy a house once in their entire life. So it is a very big milestone for people, and we take our jobs very seriously, and we try to give you as much information to make that process as stress-free as possible.
Absolutely, absolutely. We will walk you step by step, hold your hand from A to Z through the entire process. That's what we do, and that's what we love to do, and that's what we get joy from doing.
I think that's what makes us a good team. I think, at the end of the day, our clients are happy with their results. They get, some help with the things that are more important to them. Sometimes it's all about the location or the school or working with that specific budget. So it's definitely one of those things that takes, a lot of partnership and very good communication.
Absolutely, absolutely. So we have a few slides that we're gonna present. Grace is with Platinum Home Mortgage. I'm with Compass Real Estate myself, and like she said, we're a great team, and we'll take those extra steps necessary to get you in a home. We really enjoy just giving people the American dream. Yeah.
All right, so we're going to be learning about credit, all the steps, pretty much what you would be experiencing if you were to begin your home search.
Absolutely. Absolutely. So how is the market right now? Is it a good time to buy? These are a lot of frequently asked questions. And from my perspective, I feel that there's still many opportunities out there. Buying homes that are more affordable. Buying a home is way more affordable than renting right now. So if you're in a position to buy, I feel that it's always better to buy. Now, everybody's situation is different. Some people may have some things to work on and whatnot, but if you are able to buy, I think real estate is a long-term asset, a long-term goal, a long-term play. The value increases over time. So you may have small dips in markets, you have your cycles, your ups and downs, but over 20, 30, 40-year period, you can't lose in real estate.
Absolutely, because at the end of the day, on year 30, when you're retiring, you don't have a mortgage anymore. And that's the difference between being a homeowner versus being a renter. And in this market, we've seen that there's been a lot more protections for homeowners than there have been for renters. So I think by far that's one of the biggest benefits is people are getting a lot of aid. They're getting a break. And from a landlord standpoint, they're not getting a break, right? The landlord's still, asking you, hey, how we doing for April? And so I definitely think that, you know, housing is essential. And it's one of those things that it has to make sense for people. So when people ask me right now, how's the market? Is it a good time to buy? You know, timing is everything. So the first thing that we need to do is see where you are. So some people that have been calling me aren't currently working, you know, they're preparing their finances, but it's very good to have a conversation with a lender like myself so we can guide you through a couple of steps. We have a lot of resources available to us. We can show you how to fix the credit. I can share with you which accounts to tackle. And, you know, being in the best financial position in order to purchase is going to allow you to purchase. And then from there, you need to time it to where you're not feeling overextended, to where the mortgage payment is something that makes sense. So right now, what I've been seeing is that one of my clients just got locked in for a 2.75 interest rate, fixed for 30 years.
Wow.
Okay, on an FHA loan for a $770,000 house. Now, if you ask me, is it a good time to buy for them? Yes, it's the house that they've wanted for a year. The seller's finally willing to sell it to them. It's off market. They still went after it. And now, instead of locking in what they would have gotten 4 months ago, which was around a 4.2, they're locking in a 2.7, and that's a $400 payment savings. So tell me, that is what makes sense, right, for someone. So it's analyzing their situation individually every time. And by no means do I always say it's a good time to buy for everybody. But I can always have a conversation with you and kind of share with you what's happening in the market, and then see if it's a good fit for you.
Absolutely. That's great. That's amazing, that interest rate that you were able to lock in for a $700,000 property. I'm jealous.
But see, these are the secrets, right, that everybody wants to know. And that's our goal here with these seminars, is to share those secrets with you so you see what other people are getting and you can apply it to your own life.
Absolutely. Absolutely. And just to go back to what we said about renting, I mean, it's always an option, but think about becoming a homeowner. What are the benefits? You may not know, or you may know, like you get certain tax breaks. Paying off your own mortgage is add value, which is equity, and that's what you want. That's what you want. You want to build up the equity, and then maybe from there you have more options. Your foot is in the door. Maybe you want to pull out some equity to fix up your home, or pull out some equity to purchase another home and use that one as a rental property. You want to build that income, that residual income, I like to call it. So, like I said, if you're able to buy, it's always a great time to buy.
And touching on the tax breaks, I mean, the tax breaks, you get to deduct some of the mortgage interest off of on your taxes. And so what ends up happening is that's a savings that you wouldn't have as a renter. If you buy an investment property, you can write off all of the repairs as well. If the home isn't rented out, then you only report the months that it was rented. And so it ends up becoming a big tax shelter for people when they have investment properties.
Right. Awesome. That's great. Great stuff. Great stuff to know. And it's never really too early to start the process. I mean, the earlier sometimes the better, because there may be some things that you may need to fix. You know, you may need to fix some credit. You may need to save a little more money. You may need to add more time to your employment history. It's never best to rush into something. You always want to take your time, and we will walk you through the process and make this as stress-free as possible.
Absolutely. Some people are buying within 3 months, within 1 year, within 6 months. All of their timing is different because sometimes there's 3 components to buy a house. There's credit, income, and down payment. Those are the 3 things that you need to worry about. And sometimes we're a little shy on one of those 3 things. And so in sitting down and, you know, talking to someone, particularly me, right, that handles the money aspect of things, I can share with you what the bank is going to want in order for you to qualify for that home loan. So in, you know, looking at, for example, you have 1.5 years on the employment, then we'll time everything and we'll create a plan so that you can be prepared to purchase once you hit that 2-year employment history, or once you have that down payment. So it's definitely never too early.
Right, because we want to be able to put you in the best position possible when that time does come. You'll be ready to go.
Mm-hmm.
That's the whole idea. So just to go over some of the steps. The first step, we will with me, myself, Grace. We like to have a buyer's consultation all together. So we just, we get together and the initial meeting, we go over the process. Grace will go over the numbers. She's really good at numbers, and I'll go over the whole home buying searching process, and we'll make a wish list. We'll get to know each other, and just kind of vibe out and just figure out what your needs are. And we'll determine what you're looking for in a home and just start the list. So that's the first step.
Yeah, and typically they sit down with you and kind of share with you, what they're trying to do. And then they come to me because I'm the numbers aspect, and I'm going to help create the budget with them so that we can see, okay, how much can we buy? And then you're going to answer, what can I buy with this budget?
Absolutely. Absolutely. So next step is we'll get you pre-qualified or pre-approved, I would like to say. We'll meet with Grace, and she can help you determine your buying price range. We'll be prepared to dig into the paperwork, like she mentioned, look at the numbers, look at your W-2s and tax returns, and we'll do a full review. Grace, you want to tell them a little bit about the pre-qual process?
So when somebody comes to get qualified, we need to kind of understand your full financial picture. So we're going to run a credit report, and we're going to give you a copy of it so you can see where you stand. And if there's some adjustments that we need to make, then we'll definitely take a look at that. The second part is we're going to look at the income. So the bank uses your W-2s and taxes in order to see what you're earning. And we also take a look at what you're currently earning. So for some people, they're on hold and are about to go back to work. And what we're doing with them is we're giving them a projected calculation, seeing kind of what they're going to be earning, so that way they can stay, prepared and not necessarily buy tomorrow. And for the essential workers that in some instances are thriving right now, we can also, showcase, what the options are going to be for them right away. So the best thing is to set up a virtual appointment, with a lender and have a conversation about the finances. And then if everything looks good, then we'll send you a list of what we're going to need to have you send over. And it's things like pay stubs and bank statements and W-2s.
Awesome. So, and then I'll come in. We'll figure the numbers out. We'll figure out what you can qualify for, and then we'll base our home search around that. And I'll start sending you automated listing alerts as properties hit the market. And we just go with that process.
Yeah. So once they get pre-approved, the pre-approval is valid for 4 months, and that's when most people start home shopping. Every single time that you're going to write an offer, you want to check back in with us because, as you know, Hakeem, there's so many cities, there's so many different requirements. Some of our clients are getting special grants, and they are specific to, let's say, Contra Costa or Solano. So you always want to stay in communication with myself and Hakeem so we can make sure that it's going to be a good fit for your budget.
Absolutely. And we want to make sure that the home that you choose will be a good fit. We want to look at, I'll look at a few questions that I like to ask them, like, where do you work? Where do your spouse work? Do you have any children? Let's say you work in San Francisco. Let's say you commute to work by BART, the BART train. I will look at cities around there because I want to shorten your commute. And I want to say, let's say you have a couple kids, maybe you need a 3-bedroom. So I'll base your search criteria around your specific needs. Okay. And the step 4, we'll schedule viewing and we'll start attending open houses. So here's where the buying process really gets fun. We'll go to local open houses together or virtually. Times right now, a lot of stuff is virtual right now, but we can always do virtual appointments. Like we're doing this virtual webinar right now. We have 3D Matterport. We can go show you the homes. We can do FaceTime, whatever you feel comfortable with. And we take every precaution necessary to keep myself and you and your family safe and healthy.
For sure.
And we also look at, we'll talk about your budget, what will work for you, and make sure that we find you the perfect home. And any home that you love is the perfect home for you. Okay, so with that, find the perfect home and write an offer. When you get ready to make an offer, I will present a written offer to the seller. And while everyone loves getting their offer accepted right away, the seller could come back to us with a counter offer or reject your initial offer altogether. But we're happy to walk you through each of these possibilities and exactly how to handle them. Once the offer is accepted, it's time to get your finances in order and move forward to the next step.
And the golden rule on that is, know your numbers. So if you know what the payment looks like and all of that, it really prevents a lot of frustrations for people. So knowing the A to Z cost when you're writing an offer, you would be surprised. Sometimes I send, 4, 5, 6 estimates for people. They want to know the payment at 500, at 505, with 3% down, with 5% down. And it sounds like a lot of information that I'm throwing at you, but it's my job to give you all of that information so that when you go to write that offer with Hakeem, you're excited, you know exactly what to expect, and there's no surprises, because we want to make sure that you're happy throughout the whole process. And setting clear expectations and writing a good, clean offer is one of the best ways.
Absolutely, absolutely. The next step, step 6, is acceptance, appraisal, and the inspection. Once the seller accepts your offer, the home is going through an appraisal and inspection process. The appraisal guarantees that the price of the property matches the condition of the property, while the inspection makes sure that everything in the home is functioning properly and there are no major issues. We don't want any surprises. These are the last steps before the shiny keys to your home are placed in your hand.
Honestly, I think that, just as past customers and going through the home buying process ourselves, I think that that's one of the things that really made me, really try to give you as much information as a customer, because I can only imagine, you're first hearing some of this stuff, and you went through the process yourself, and it can be pretty stressful to turn in all that information. So that way you can confidently start the process. You want to make sure that you're asking all those questions and that, we as professionals are providing you all those answers.
Absolutely, absolutely. We answer there's, like you said earlier, there's no question too small and no question too big for that matter.
No, and I mean, you've heard those nightmare transactions, where everything goes wrong in the
It
deal.
happens.
And that's where, you have to make sure you're staying in touch with me and that we're explaining everything to you, because we don't want that.
Right. And what we like to do is we like to foresee any problems. So Grace and I, we work together. We've been working together for years now, and we've seen a lot, though sometimes every new transaction you learn something new, which is always great. But we like to foresee problems and get in front of them and deal with them early. Again,
well, 16 years later, I learn something every day, and there's always programs rolling out, that we have to study and make sure that we, know all the details for you guys.
And we're going to get into a lot of the loan programs at the end of this and answer any questions you guys may have. So yeah, step 7 is it's time to close, and it's time to get them keys to your new home. So get excited, because it's time to close in your home. This process includes going through all of the final paperwork, the signing your name. It's a lot, but don't forget to bring all of the paperwork you've collected along the way and your down payment. And Grace can maybe touch on a little bit about that as well as we go through this presentation.
Yeah, and I'm going to be covering the programs in just a bit. This is pretty much what you would go through A to Z, but first things first, you want to know which programs you're going to be able to qualify for. So I'll definitely be, touching on those 2 different programs that are out there and how they work.
Absolutely. And step 8 is almost time to celebrate. Hey!
Do the walkthrough, the listing video, pop the champagne. After all that work, you got to celebrate.
You got to celebrate. You got them keys in your hand.
How long is it taking you roughly when somebody starts their home buying search? I get that question all the time.
Well, it depends on the home buyer, honestly. It could be, it's their pace, right? So I have some home buyers that are really aggressive, and some have time limits where they may need to move by a certain day. right?
Right.
So they may, let's say they're renting and their lease is up in 2 months. So it's a little more pressure and they're a little more motivated, or someone may want to leave their parents' house. Maybe they have kids and they just want to get their own space. So it kind of depends on the pace of the buyer, I would say. But typically, let's say from start to finish on average, I would say uh, maybe a couple months at the most.
Yeah,
Maybe
and the
three.
process from my side takes around 30 days. It could be a little less. The fastest that we can move is between 15 to 21 days. But usually what we want to do is make sure we have everything in and submitted in order to do that. So we definitely want to, get as much information up front as we can, and we turn it into underwriting when we see that you're actively searching. And that's big right now because the market is changing so much that you want to make sure that you looked at all the angles so that we can prevent, any other stuff popping up, because we already have, everything else to deal with. So I'm definitely trying to turn everything in for you. And that way we can shorten, any other items that you might need so you don't have to scramble to get them.
Right. And Grace, real quick, for those who may not know the importance, who may not even know what underwriting is, can you touch a little bit about the importance? First, define what underwriting means and what is the importance of underwriting right away to kind of speed up the process?
So to get pre-approved means that I reviewed the loan, ran it through my whole system, made sure I looked at the credit, the income, the assets, and then gave you a certificate that says that I vetted your finances already. But I don't get the final word on it. The bank does. And so my job is to prepare things in a way that is going to pass for the bank. So I always tell people, I'm like your lawyer, and I'm going to send it to the bank in a way that it's going to pass. So you have to tell me everything so that I can make sure that we don't miss something, and then some evidence comes up that then we have to fight against, right? So the best thing to do, exactly. So because banks are getting tough right now, what we're doing is we're taking it a step further. A pre-approval is not good enough right now. We want to send it all the way through the ranks to make sure that we know everything else that they're going to want, and that way you have enough time to gather it.
Awesome. So we want to deal with any issues that arise. We want to put out any fires that flame up. We want to get ahead of all the issues.
Exactly.
And some of your loan options and the loan programs available. This is the fun part, because Grace called me this morning and said, "Hey, I want to edit the slides. I got some new great loan programs out there." I said, "Oh, okay, Grace."
15 minutes before. No.
So this is exciting. So I'm gonna let Grace go ahead and take it away.
Okay, so big things happening when it comes to the programs right now. Banks are really tightening up on their requirements. And so what you really want to make sure is that your finances are in order. So I know that that's hard for some people right now because not everyone's in the same boat financially. But that doesn't mean you want to let go of all of your accounts, right? So make sure you call the bank, make sure you get, on that deferral, make sure that you don't assume that they're going to give you a break on the credit card, make the phone calls and get on a financial diet so you can make sure that the essential stuff is still in check. And that means credit card payments, car payments, all of those things that are going to hurt you down the road. Because, imagine if, for example, you can't make the rent payment and then you let the credit go. When you go to rent somewhere else, you're going to have that eviction and all those collections on the credit. And so you want to, I know that not everybody's going to be able to do that. There's so many people that are unemployed, but I definitely think I've inspired some people to kind of revert and, kind of pivot on their finances a little bit. I have some friends that got unemployed. They started a pop-up on Instagram and started selling food, and it's all of that that's going to kind of get you through, right? And then when everything bounces back, then you'll still be in a better place. So for the people that are able to qualify right now, the loans used to require a 580 credit score. Now they require a 640 credit score.
So it got a little tighter then.
Yeah. So you can tell right? That they're a little nervous to just lend to you if you have a history of not being able to repay. And so if you're at, let's say, 620, then we're going to give you some tips on what to do in order to get to 640. So 640 is the credit score requirement in order to qualify for a loan. And some people have credit monitoring, so they can see what their score is at. If you don't have that, we'll run a credit report for you, and we'll give you a copy of it and explain it to you, because there's 3 bureaus that report, and we pick the middle one, and that's how we determine what score you have. Secondly, the programs available for FHA require 3.5% down, and they're a little bit more flexible when it comes to, history. Some people have gaps. They went to school and then they launched their career, or they have a bankruptcy in the past. And FHA has a certain set of rules that are a bit more flexible for those people and have lower credit score requirements historically and lower down payment requirements. So that is one of the most popular programs for first-time home buyers, and it finances up to a 765 loan amount with that 3.5% down.
Grace, I'm sorry to cut you off, Grace. Real quick,
No, go ahead.
I'm a first-time home buyer. I don't know nothing about loan types, different types of loan. What is FHA?
FHA is the entity, the government entity that insures your loan. So, that's the government backing that handles the rules for lending for us. So they set the rules for all the banks.
Awesome. So that's important for people to understand. People ask me a lot of times, like, what does that mean, FHA?
Yeah.
What is conventional? What is FHA? So
the easiest way is this is a government program. And so it has a couple special tools that they use in order to get you to be able to own. And the beauty of these programs is that they're combinable with grants. So you can get a loan, right? And that loan requires that 3% down, but then we can get a grant, and the grant will help you cover the rest.
Now that's not, is that a new thing?
It's not a new thing. It's been very popular. Some of the banks kind of backed out of the market for a bit during COVID-19. I am starting to see a little bit of light at the end of the tunnel because the government has been, intervening quite a bit, and they're buying all the bonds. And what that tells me is they're trying to support the housing market as much as they can.
Right. Awesome. So shall we go to the next slide?
Let's do it.
Well, here's another one. Conventional. What does that mean? Take it away, Grace.
So there's 2 types of programs that you're going to get. You're either going to get an FHA loan, which is the one I just covered, or you're going to get a conventional loan. Conventional loans were designed to reward you for having excellent finances, which means that if you have pristine credit, which is considered 740 and up, or if you have a nice down payment, so you've been saving, you have 10, 20% down, then what we can do is we can reward you with a lower rate, with better terms. There's less fees involved with a conventional loan. And once you put 20% down, you don't have what's called mortgage insurance. And what mortgage insurance is when you buy a house and you don't put 20% down, the bank puts an insurance on there to where if you foreclose, they get their money back. So that mortgage insurance does nothing for you. It's a waste of money from a consumer standpoint. So if somebody can save 20% down, then they dodge that. They don't need that mortgage insurance, and they don't spend that extra money, so their mortgage payment is lower, and they get better rates. So what we try to coach people through is putting their finances in the best shape so that they can go with a conventional loan, but not everybody has, 3, 5, 10, 20% down. And so that's why there's 2 programs, which is the FHA program, which a lot of first-time home buyers take advantage of, and conventional loans are usually for mover-uppers. So people that are, for example, selling a house, buying another house, have a little bit of money to play with, so that they can be rewarded with nice low rates and better terms.
Awesome. Here's the fun part, the grant programs.
Okay, so I've been holding back on the grant programs because I wanted to be absolutely sure that we could offer these to you. You know, my number one goal is to always protect people and their finances. I treat your money like it's my money, and we never want to cost you anything, right? So we want to make sure that we are researching everything, that we know what's available. Around 3 weeks ago, they had canceled some of our down payment assistance program. I did a lot of the Cal HFA program, and it's a government program that helps you with the down payment. Some lenders still have it. I got word from corporate that they were bringing some of those back, but we also have some grant programs in the city of Contra Costa and Oakland. So what happens is, you know, in those cities, we can give you $20,000 and up, and a grant means that it's forgivable. So it's not like the mortgage, you know, and it's what people say, free money, right? And it's not exactly free money, but it is money that if you live in your home for 5 years will 100% be forgiven.
That's awesome. It's almost free, I guess. It's just free if you know, with requirements. Like once you live in there for 5 years, you said you don't have to pay it back, right?
And you know what? And it's for first-time home buyers. You know, they want to make sure you're not making $200,000 a year to get that program because you don't need it. But you know, the nonprofit agencies that offer these are very special. They're designed, you know, to teach you how to be a good homeowner, just like what we're doing today. But they have government-backed workshops that you can attend and get a 8-hour certificate for. And that allows you to get the money. So it's as simple as that. Yes, you can get, you know, $20,000 towards your down payment and closing costs. It's a really nice extra bonus to get. And for those people that meet the income limits and stuff like that, it's a no-brainer. Sometimes people are like, what's the catch? Like, why am I gonna get $20,000? Yeah. I'll tell you why. Banks like Wells Fargo had to repay money for opening accounts for people, so they had to reinvest back into the community. That was kind of like their ticket, you know, that slap on the wrist that they got. And so the consumers get to benefit from it because they can get money towards their down payment and closing costs. There's also state programs that have always been around that help people that don't make, you know, a whole ton of money get their foot in the door to home ownership. But I think that there's a lack of information in our market about it. And that's why we're having conversations like this to like spread the word out there so that it becomes more common knowledge for people. And that way you can Google grant programs, you can reach out to me, and I'd be happy to share those links with you.
Awesome. Real quick, and we'll move to the next slide. I don't know if you touched on it. What are the income limits?
So usually you want to make around 129 and below. The Cal HFA program does go up to 200,000. And wow. So if that is your case, then we'll recommend you with one of your lenders or one of my lender partners that is actively doing that specific program. So I definitely, you know, always check in with people and see, you know, where they're at, and if it's something that they need, then we'll you know, give you the right direction for it.
Awesome. Awesome. Okay, maybe I can go over this a little bit.
This is all you.
Tips on writing a winning offer. And I love writing winning offers. I write a lot of winning offers. So I think it's very important when you want to, because we know that our market is really competitive. You know, homes are getting multiple offers right now. There's multiple offer situations. So you have to compete as a buyer. So things that I like to do to assure that my buyers' offers get accepted, I like to communicate, communication. I over communicate with the listing agent. I reach out to them pretty much every day to say, hey, how's it going? What is the situation with the offers? What will it take to get it done? And sometimes they'll tell me, sometimes they may not, but I kind of pick their brain to see how many offers you got, and you know, what will it take to get it done, and what are your sellers looking for? What do they want? Because I will try to commit to having my buyers write an offer that's attractive to the sellers.
So what's an attractive offer?
Let's say an attractive offer. Let's say, well, of course, an offer that's over asking price. That's number one. That's pretty attractive. An offer with, let's say, no or minimal contingency periods. Let's say, I have a client that's an all cash. So he's going to make an offer. So there's no loan contingency and he may not do an inspection. So we remove the inspection contingency. That's a very attractive offer. And another thing I like to do is I like to have my buyers write a letter or a video, send a video to the sellers and say, hey, explaining who they are and try to build some type of camaraderie or, with the sellers and just explain why they love the house so much. And that works more often than not.
So it sounds like it's not always about money, right? Like
right.
there's several different things, layers that go into writing a nice offer.
That is correct. Absolutely. Absolutely. Strong terms. And sometimes with the letter, like, it may be someone who's selling a home and the money may not be the biggest thing. They just want to ensure that someone that's getting this house is going to really take care of it.
They might want a fair price, but they want it to go to a nice family because it's the house that they grew up in. And I think that's what you mean, right? By having really good communication with the listing agent, because you want to understand why they want to sell and what is going to make things work for them.
Absolutely. What is their motivation? Absolutely.
Creating a win-win. Because we want to make sure you're not spending an arm and a leg, but it also has to make sense with what the seller's motivations were to sell. So sometimes people ask me, well, this house is listed for $500. Can I offer $450? What would be your answer to that?
So you asked me if a seller, say it one more time.
You just want to lowball it, $50,000.
How do I deal with that if my buyers want to lowball it?
Yeah.
All right. Well, see what I do. I educate them, and I pull out some comps. I show them like this house very comparable to this house sold for this much money this long ago. So I just try to get them to see.
It has to make sense.
It has to be visual. It has to be visual, because I don't like writing offers just to write offers. I like writing offers to win.
I think facts are friendly. So, we need to back up why we want to do that, right? So I want a deal just like you want a deal, a good deal. But it does need to make sense with what's going on the market. Now, maybe your answer would be different if the property's been listed for 60 days, correct?
Correct. Absolutely. And that kind of brings me to my next slide, finding deals and trying to do what everyone else is not do what everyone else is doing. So we look at the shadow market, we look at like the temporary off market, we look at pending homes, we look at homes that have been sitting on the market for a while. Let's say a home been sitting on the market for 4 weeks, like you said, maybe even 30 days. That means that basically when a house has been sitting on the market for a long time, usually the market does not support the price of that home. It's not priced right. Because the market always determines the value of your home. Like no individual can determine the value of the market. So if your house has been sitting too long, it's just too overpriced. And some listing agents understand that, some may not. So when it's been sitting on the market for a long time, I think that gives us a window of opportunity to say, hey, let's take it off your hands for this amount.
Right.
So multi-unit, in-law unit properties, live for free, get extra income. This is a good one. Multi-units. Are you looking for income? Well, we talked a little bit about earlier, and I know you can attest to this, Grace. I know you got some things going on with multi-units and stuff like that. But so it's income producing, like, in-law units. Now they have the accessory dwelling units. They're passing new laws to make that more accessible to deal with the housing crisis in California. And I know a lot of clients of mine that are building or they're converting their home into ADUs, accessory dwelling units, and they're creating an extra income for themselves. Like I said, real estate is kind of a long-term play. If you want to create income for yourself, this is a way to go. This is sort of like a house hacking situation here.
That famous word, house hacking. And a lot of people, who doesn't want to do that? But you need to know how to do it. Right. And so if a 25-year-old came up to me and said, how do I make a good investment? You know what my answer to them would be?
What would your
Buy a
answer be?
fourplex.
Buy a fourplex.
Buy a fourplex. Because the first time that you buy a property, so let's say you got out of school, you started your career, you're making $80,000, $90,000 a year, shoot, maybe even less, right?
Mm-hmm.
But you're established, you got everything together, and you're a single guy, a single girl. Well, in order to grow your portfolio, you have one chance to buy a property with 3.5% down with that FHA program that I talked about. And you can buy a house, a duplex, a triplex, or a fourplex with the 3.5% down.
With the FHA. So let's dig a little bit deeper into that and explain to me. So from what I understand, that, okay, let's say you buy a threeplex or a fourplex, you live in one unit, right? And that you use some of that rental income to go towards the purchase. Break that down for me, Grace.
Yeah, so you're now the owner of the building, and the other 3 rents count towards your income because you are going to be receiving income from them. So we count that towards the qualification for you. So you get to be the owner of the apartment building, and all these other 3 people are helping you pay your mortgage. They're your silent partners in this transaction. So, I mean, that's what people are, right? That's what you as a renter are to your landlord. You're that silent partner that on year 30 doesn't get a cut on that investment. And so it's so different for the owner versus the renter, because the owner gets a return on their investment. If it's a house, the equity. If it's units, it's rental income and the equity. So by far, you're going to be so much more well positioned in 10 or 20 years.
So what key thing stood out to me is said you're a silent partner who don't even get a cut of the money.
Isn't that crazy?
Like,
isn't that crazy?
What part, like, define partner? You know what I mean? Like, you redefine the partner. So yeah, but think about that for a minute. I mean, that's very key right there.
Yeah. So I mean, definitely it's changing your perspective on it. Because a lot of young people see it as a commitment. Right now, I can't get out. What if I want to move to LA tomorrow? Well, leave it rented. Move to LA.
Yeah, exactly. And remember, this may just be your first home. So you may not find your dream home yet. As the statistics say, your first home will not be your last home. Let's say every 7, 10, 11 years, your family grows, or your family smalls, kids go to college. You're going to make a change. So, you may not find your dream home. It may be a starter home, but you got your foot in the door, and by having your foot in the door, it will help you reach your goals a lot faster. So like I said, you can take out some equity. You can maybe buy another home and rent this one out. So there's just different options. It just opens the door for you to put yourself in a better position, and you can play, remember, this is chess, not checkers.
Well, so I'll share a little story about how I bought my first house. I was 24 years old when I bought my first house. I bought it on my own. And so, I had, my fiance at the time, and we used my qualification only. We bought a $170,000 house. It was the ugliest house in the nicest neighborhood, original owners. The whole house was yellow. We had to get special paint for it and pull out a lumber liquidator card and put in the flooring ourselves. And my stepdad painted it. I borrowed $10,000 from my mom that I eventually paid back, but it got my foot in the door and I became a homeowner. And then eventually I sold it for around $500,000 and reinvested that money into another property and another property. And then we did it again, and so slowly it built up a real estate portfolio for us. And, by far the first house was the hardest, but it opened more doors for us down the road, and I'm 32 years old now. And, I've bought and sold several properties, and we bought, our second home under my husband. So it's knowing all of those loopholes and using the rules in your favor to build a portfolio. And that way you're not as worried, when things, curveballs get thrown your way, like what's going on now with COVID-19.
Absolutely. Grace, you mean to tell me you're not 25?
32.
Awesome, awesome. So yeah, and well, if there's any, I think we had someone pop in. I don't know if he's still in, but any questions, feel free to reach out. You can find me at Love Bay Agent and Grace at Loans by Grace on all the different platforms: Facebook, Instagram, YouTube. We would love to answer any questions you may have, anything like that.
And we will be doing this again. So I'm excited for this to go on Facebook and just get the word out there so people can know, more about the process. We're going to be covering, a bunch of different topics, and we want to hear from you. Like, what do you want to learn more about? So we can bring all that information to you.
Absolutely, absolutely. We'll answer any questions you may have. So feel free to reach out. If you're ready to get started, please don't hesitate to reach out to us. We would love to help you become a homeowner. And we appreciate your time. Thanks for joining us today. This was a great one. It lasted right about an hour. Thank you, Grace, for coming in and blessing everybody with your presence, giving them a wealth of knowledge, a wealth of information, and some little personal tips that you threw out there about your situation. We definitely appreciate that, because I think some people need to really see. Like, there's a lot of lenders out there. I like to say there's a lot of lenders out there, but they do a lot of loans, but they may not be in a personal situation. They may have never even purchased a home or multiple homes and things like that. So I think the value that you add is from you've experienced it with your real life, from the investor aspect of it, and you're the loan person, and you got the numbers down. So that's why I always come to you for any personal insights.
Thank you. No, and I mean, that's my goal, is to, stay informed, give you all of that information. And, that's what someone did for me when I first learned how to, get into the mortgage world. So I definitely, use that same philosophy, and I want to pass on that information to you, and, cheers to your success.
Cheers. And we appreciate you for stopping by. And that will conclude our home buyer webinar for today, and we'll continue to do these like maybe on a weekly or bi-weekly basis. And we just want to keep getting the information out there, and we're going to update the slides as new information come on. We're going to keep it hot and fresh for y'all. And you can
leave your questions here.
Put your questions there, or send them to me on my IG. Instagram is at Love Bay Agent. Grace is at Loans by Grace, right?
Hit the DM. Yes.
Hit the DM. Hit my link in my bio. So thank you, Grace, very much. I appreciate you for taking time out on this Saturday and doing this webinar with me.
Right on. And, let us know what days you guys want to hear from us. So if it's Thursday, it's Friday, it's Saturday, we want to hear from you and bring you as much information as possible.
Absolutely. So until next time, see you guys later.
Bye.
Bye-bye.